Hey there, everybody. Thomas with basecamptrading. It is Thursday, August 10th, and we're going to continue on with the Mistakes Traders Make series. But before we do that, I want to point out what happened here in crude oil today, because it's a setup that we look for all the time and that you hear me talking about in all kinds of videos here on YouTube that I put together. And that's just a run on the stops. And how do we know when it's run on the stops? Well, you look at support or resistance. In this case, we're looking at resistance from the pivot high up at 49.96. Every time we popped above it, crude immediately pulled back and closed below it. And then you can see here we finally broke high, turned around, pulled all the way back down, and closed down. And then a run on the stops triggers when it breaks the previous bar's low. So in this case, it triggered when we broke down right over here around 47 or 49.70 or so, and we proceeded to fall through the floor all the way down to support. And now we're sitting around top of the support here. But the reason I wanted to talk about this and the mistake that we're going to talk about today is one that we see traders making all the time, and that is getting stuck on an idea. So the reason I'm talking about that is if you look at crude oil, a lot of people have been going bullish crude oil, it's going higher, it's going higher. And today, if you had that opinion, you kept going, well, it's going to go higher, it's going to go higher, and you ignored what the price chart is actually telling you, what the market's actually showing you, and that means you were probably buying all the way down and losing money as it continued to sell off. So don't get an idea stuck in your head and never change it. I always like to say this isn't politics. It's okay to flip-flop. It's okay to say, well, it looks bullish. Okay, now the market's changed. What once looked like a bullish setup is now looking bearish. So therefore, I'm no longer going to be bullish. That's perfectly fine. There's nothing wrong with doing that. In fact, it actually protects you a lot of times. Changing your opinion or being able to change your opinion quickly protects you a lot of times from having large drawdowns and large losses when a setup that looked good initially turns around and moves the opposite direction. So be aware of that and make sure you look out for it. And the way that I like to do it myself, the way that I kind of protect myself from this happening is when I'm in the trade, I'll ask myself the question, if I wasn't in this, would I want to be in it? So if I wasn't already in it, would I want to be in it? And if I cannot say yes, then I get out of the trade right away. The other thing is, sit there and say, all right, when you first get into a trade, write down your reasons for getting into that trade. All right, now when you are looking at the market as it's moving after you've entered the trade, if you look at those reasons, you go, okay, my reason for getting in was the resistance break, for example, and it's turned around and it's pulling back down. What should have happened with that resistance break? Well, it should have started to run. Okay, it's not doing that. Does that resistance break still look valid? Well, in the case of crude oil, no, because it kept breaking high and pulling back and closing below. All right, so that's all I have for you for today. I hope it helps. Don't forget to like and subscribe. We're trying to get up to 20,000 subscribers here. So I hope you enjoyed the video. And until next time, happy trading.